Imagine waking up one day to discover that nearly €2 billion has simply vanished into thin air. Not stolen in a dramatic heist, not lost in a risky investment, but never existed in the first place. This is the story of Wirecard, a company that fooled investors, regulators, and some of the world's most prestigious financial institutions for over a decade. It all started in 1999, when Wirecard was founded in Munich, Germany, to process credit card payments for online merchants. But these weren't typical clients. Wirecard specialized in pornography websites and online gambling platforms, businesses that traditional German banks refused to touch. Where others saw reputational risk, Wirecard saw profit. The early 2000s were brutal for tech companies. The dot-com bubble had burst and Wirecard was struggling. Then, in 2002, an Austrian businessman named Markus Braun stepped in. Braun had a doctorate in economics and an IT background. He injected capital and took over as CEO. Braun's vision was ambitious. He wanted to build a global fintech powerhouse competing with PayPal and Square. To help achieve this, Braun brought in Jan Marsalek. When Marsalek joined in 2000, he was just 20 years old. By 2010, at age 30, he became Chief Operating Officer, second only to Braun. These two Austrians would lead Wirecard together for the next decade. In 2005, Wirecard went public through a reverse takeover, merging with the defunct company already on the Frankfurt Stock Exchange. This avoided the scrutiny of a traditional IPO. Once public, growth appeared spectacular. Revenue climbed rapidly. In 2006, they joined Germany's tech index. In 2007, they acquired a bank, gaining a banking license and ability to issue credit cards. Throughout the 2000s and 10s, Wirecard aggressively acquired payment companies across Europe, Asia, and North America. They entered the US market in 2017 by buying Citigroup's prepaid division. They expanded into China in 2019. With each deal, the story became more compelling. Here was a German company challenging Silicon Valley. By 2018, Wirecard's valuation hit €24 billion, exceeding Deutsche Bank. That year, they joined the DAX, Germany's most prestigious index, alongside BMW and Siemens. For a country criticized for lacking tech innovation, Wirecard was a source of national pride. But something was deeply wrong, and skeptics had been sounding alarms for years. As early as 2008, irregularities were questioned. In 2015, the Financial Times began investigating. By 2016, a detailed report documenting alleged fraud was sent to BaFin, Germany's financial regulator. Here's where it gets bizarre. Rather than investigating Wirecard, BaFin went after the critics. At Wirecard's urging, prosecutors investigated the short sellers for market manipulation. In February 2019, BaFin even banned short selling of Wirecard stock. The regulator was protecting Wirecard instead of investigating it. Wirecard fought back aggressively. In January 2019, the Financial Times published articles revealing forged contracts and inflated Asian revenues. Wirecard sued them for defamation. German prosecutors opened a criminal investigation into Dan McCrum, the journalist leading the investigation. A reporter was being investigated for doing journalism, but it went further. Wirecard hired private investigators and cyber firms to surveil critics. In 2022, an Israeli detective pleaded guilty to hacking and identity theft on Wirecard's behalf, admitting to monitoring journalists' emails and tracking their movements. It was corporate warfare. The Financial Times kept digging. They discovered that huge portions of Wirecard's revenue supposedly came from 3 Asian partners in the Philippines, Singapore and Dubai. But when journalists verified these operations, they found empty offices, suburban houses, and even a rice shed. The businesses generating billions didn't seem to exist. In April 2019, SoftBank announced a €900 million investment, seemingly validating Wirecard. But the same day, the Financial Times published more evidence of fabricated transactions. Braun dismissed the allegations. Ernst Young, Wirecard's auditor for over a decade, approved the 2018 statements. Pressure built through 2019 and early 2020. In March 2020, KPMG was brought in for an independent audit. The April report was devastating. They couldn't verify arrangements responsible for most profits and couldn't confirm €1 billion in cash. The only evidence was documents from a Singapore trustee who had conveniently cut ties with Wirecard. Then came the collapse. On June 16, 2020, 2 Philippine banks told Ernst Young that documents showing €1.9 billion were fake. 2 days later, Wirecard announced the money was missing. Marsalek was suspended immediately. The next day, Braun resigned as CEO. The newly hired compliance officer, on the job 2 days, became interim CEO of a company in freefall. On June 22nd, Wirecard admitted the €1.9 billion probably didn't exist. Think about that. A company trusted by millions, audited by a top firm, regulated by German authorities, and in the country's premier index, had nearly €2 billion on its books that was fictional. 3 days later, Wirecard filed for insolvency with debts of almost €4 billion. A company worth $24 billion 2 years earlier was worthless. Thousands of investors lost everything. Only the Volkswagen emission scandal caused a bigger single-day collapse in German stock market history. Police arrested Markus Braun on fraud and manipulation charges. He was released on €5 million bail but arrested again in July. Authorities believe the fraud began in 2015, with executives conspiring to inflate revenue and profits. Banks and investors had put €3.2 billion into Wirecard based on fabricated statements. But Jan Marsalek disappeared. He told colleagues he was flying to the Philippines to prove his innocence. That was a lie. Investigative journalists traced his movements. Marsalek never went to the Philippines. He flew to Belarus, then to Moscow. Germany requested extradition, and Interpol issued a warrant, but Marsalek was protected. By 2025, investigations revealed he was living in Russia under a false identity. Phone data placed him repeatedly near FSB headquarters in Moscow. Reports indicated he was working with Russian military intelligence, possibly supplying sensitive equipment. Marsalek had transformed from executive to one of Europe's most wanted fugitives under Russian protection. Other executives faced justice. Oliver Bellenhaus, who ran a key subsidiary, turned himself in. The CFO and head of accounting were arrested. Christopher Bauer, the former Asia manager close to Marsalek, died mysteriously in Manila. The scandal exposed catastrophic institutional failures. BaFin hadn't just failed to detect fraud, but actively protected Wirecard by investigating critics. Felix Hufeld, BaFin's president, initially defended the agency but later admitted it was a complete disaster. He and his deputy resigned in January 2021. The European Commission investigated whether BaFin violated EU rules. Ernst Young faced intense criticism for issuing clean reports, while billions in fake cash went unnoticed. Germany's accounting oversight body had just 15 employees and a €6 million budget to police all public companies in Europe's largest economy. The scandal highlighted troubling political connections. Braun had advised major institutions and even served on Austrian Chancellor Sebastian Kurz's strategy unit. The German government had embraced Wirecard as a tech champion, and these connections may have shielded the company from scrutiny. Braun's trial began in December 2022. He maintains his innocence, claiming he was the victim of a conspiracy by subordinates. He blames Marsalek and others for creating shadow operations with fake revenues. Prosecutors say Braun knowingly approved fabricated balance sheets. In September 2024, a court ordered 3 former board members to pay €140 million in damages. A separate judgment was issued against Marsalek, though he remains a fugitive. As of early 2026, Braun has been in custody over 5 years while his trial continues. The collapse led to reform demands. Germany announced plans to strengthen regulations and expand oversight powers. The EU proposed new governance rules, but damage was done. Thousands lost their savings, pension funds lost hundreds of millions, and merchants scrambled for alternatives. The Wirecard story is about more than accounting fraud. It's about regulatory capture, where watchdogs protected companies instead of monitoring them. It's about journalistic persistence against lawsuits and cyber attacks. It's international intrigue with missing billions, forged documents, alleged spies, and a fugitive in Moscow. Most importantly, it's a stark reminder that even in one of the world's most developed economies with supposedly rigorous oversight, massive fraud can flourish for over a decade when the right people look the other way. The question haunting Germany's financial establishment is devastating. If this could happen to Wirecard, a celebrated national champion trusted by millions, what else are we missing right now?